All right, let's talk Marti Technologies, ticker MRT. They just dropped their H1 2025 numbers, and wow, the growth is off the charts. But Wall Street isn't exactly throwing a party. So what's the deal here? Is this a massive opportunity everyone's missing, or is there something to be worried about? Let's break it down.
So, right out of the gate on the call, management came out swinging. They said that 2025 is going to be the year for them. They're basically betting the house on their big move into ride-hailing. And they're not shy about saying they want to own the Turkish market. That's a bold statement, for sure. And here's the number that backs up all that talk. 107%. That's the year-over-year jump in their unique ride-hailing riders. I mean, that's just massive growth. You can tell this is the number they really want investors to see. So let's dig a little deeper, shall we? Okay, first things first, let's get a quick snapshot of the results. So check this out. Revenues shot up 70% to 14.3 million. That's a great start. But what's really interesting is that their adjusted EBITDA loss got way smaller. It improved by 47%. That's a good sign. It means they're getting more efficient. But, and this is a big but, you see that net loss of 19.3 million? Yeah, we definitely need to keep that in the back of our minds. And what's driving that big revenue number? It's the users. They've got 2.28 million unique riders in their ride-hailing service now. That tells you their pivot is working. People are actually using the new feature. Of course, you can't have riders without drivers, right? And they are crushing it on that front too. Over 327,000 registered drivers on the platform now. That's a 92% jump from last year. Management even said on the call that they have zero problems finding enough drivers, which is, a pretty big deal for a company like this. So you put all that together, more riders, more drivers, and what do you get? 19.2 million total rides in just the first half of the year. That's up 41%. It's that classic network effect, right? The more people who use it, the better the service gets for everyone, and the whole thing just starts to snowball. So you might be wondering, how exactly are they pulling this off? I mean, this kind of growth doesn't just happen by accident. It's all part of a very specific game plan. Okay, this right here is the absolute key to the whole story. You gotta remember, Marti started out with those little electric scooters and bikes, but in late 2024, they basically flipped a switch and went all in on ride-hailing. That single decision, that's the engine behind all the crazy growth numbers we're seeing. And it's a pretty clear strategy. You can break it down into 4 main moves. First, they went on an expansion blitz, launching in 6 new cities. Second, they tweaked the app to make ride-hailing the first thing you see. Smart. Third, they hired more people, growing the team dedicated to this. And fourth, they're chasing a huge prize. They think the market in Turkey is worth a whopping $3 billion a year. So yeah, they're thinking big. The analyst Q&A was also super revealing. A few key things came out. First, their take rate, that's the cut they take from each ride, is still in the high single digits. That's pretty low, which means they have a ton of room to increase it later. They also mentioned they're funding all this growth with a new $23 million note. And maybe the most important nugget, their first 4 cities are already profitable on a contribution margin basis. That's huge. It proves the business model actually works. Oh, and they stuck with their full-year guidance, which tells us they expect an even bigger second half of the year. Okay, so 70% revenue growth, riders up over 100%. You think the stock would have just gone to the moon, right? Well, it didn't. Not even close. Let's talk about why the market reaction was so quiet. And this really gets to the heart of the debate around this stock. You have this incredible bull case on one side, revenues exploding, users are flooding in. But the market is looking at the other side of the coin. The stock only moved up about 1.3%. Why? Because investors are looking at those net losses and they're asking, okay, this is great, but when are you actually going to make money? They want to see a clear path to profitability. But here's the twist. Just because the price didn't move much doesn't mean no one was paying attention. Look at the volume. It was over 5 times higher than the day before. What that tells me is that a lot of people are watching this stock. They're on the sidelines, trying to figure it out. The story is definitely interesting enough to get people looking, even if they're not buying, yet. All right, so that's the story so far. The big question is, what do you do with this information? Let's get into our take and what we're looking for on the next call. So is Marti a buy, a sell, or a hold? You've got this wild growth and this huge potential market on one side, but on the other, you've got real risks. They have to execute perfectly, and they're still not profitable. What's the call? Okay, here's our rating. We're calling it a market perform. Look, the growth is absolutely phenomenal. You can't deny that. But we think the market's caution is justified. This kind of growth costs a lot of money, and they still need to prove they can turn it into actual sustainable profit. Until we see that, we think the stock will probably just move with the rest of the market. Now, if you were looking for a trade idea, this is an interesting one because of the volatility. It's what we call a low float stock, which just means there aren't a ton of shares out there to trade. So any piece of news, good or bad, can make the price swing wildly. The things to watch for would be more city launches or any good news on their margins or take rate. So one way to play it could be a small speculative position. Or if you're comfortable with options, you could look at long-dated calls to get some exposure to the upside while keeping your risk defined. This is not financial advice.